This is the Red Sign Podcast, a deep dive into legacy wealth building through real estate. Welcome to the show.
Welcome back to another episode of the Red Sign Podcast. Too bad my voice isn't as sexy as the intro guy's voice.
It's not bad.
We're getting there. Yeah. We're getting there.
Big
you guys get to put up with this. I'm Clay Winder.
Hayden Hewlett with Red Sign Team at Keller Williams.
We're excited to jump back into another episode of Building Wealth Through Real Estate. So what are we talking about today, Hayden?
We're going to talk about new construction today and all the different aspects of it all.
Well, let's take a step back. One of the biggest challenges right now is the real estate market in general. And everybody understands the frustrating part of buying real estate right now. In fact, I would probably argue that half the people that come to us, like legit, half the people that come to us end up doing new construction because it's such a bloodbath for the existing real estate out there. So what does that mean, go for new construction?
Can I pause on that for a second?
Please do.
This is an interesting thing that happened to us recently. So we sold a spec home in Lehigh at the point of the mountain here. And
what's a spec home?
A spec home, good question. A spec home is a home, it's speculative.
Good job. Good job.
So it's a home that we pre-designed and built, and we hope and pray we can find a buyer for that house. And we actually sold it right on schedule, exactly when we thought we would, which doesn't always happen either. But and that was at 4-way. And 4-way is when we have
the four systems.
Yeah, heating, electrical, plumbing, and
HVAC. Or you already said framing.
Mm-hmm. Thank you. And so there was about 2 to 3 months left in the build job, and we got it under contract and sold it. That home sold for just over $900,000. And so as soon as we got that one under contract, we put another lot in the same community under contract, and we're working on plans for that. And we actually already found a buyer for that lot before we even closed on it. And now we have a contract. Our builder is actually closing on that lot today. And we're going to build another home there, and we put another lot under contract to start our next spec home. And I thought that was interesting. That it's a $1 million home that's going up in the same community that we've already sold before, and we're redesigning plans for them. So that'll be a fully customized home.
Well, I think what you're illustrating is before the market was you can buy existing homes and get it in 30 days. Then it was like, well, Let's find spec homes that are like 3 or 4 months away from completion because they're a 4-way. Right now, buyers are aggressively pursuing dirt lots that need the entire building process.
Yeah. And so we just want to talk through what's the difference between a production builder, a custom home builder, how does the financing work with that, and kind of that whole process.
Well, let's jump into it then. So somebody comes to us and says, hey, I don't want to get into the bloodbath of competing for existing homes. I'm totally open to new construction. The minute somebody says I'm open to new construction and I want to pursue new homes, then it comes down to this two-option path that Hayden just described. And that is 1, finding what we call production homes, and 2, finding custom homes. The number one difference, and this is important for buyers to understand, is the financing. That's what defines these two paths. One path is you, the buyer, have to get what's called a new construction loan. You use that loan to buy the lot and hire the builder to build your home. The second path, what we kind of reference as production home, is where you identify a seller that usually is the builder that already owns the lot and is already planning on building the home on their dime, and you just secure it with a security deposit, in other words, construction deposit or earnest money.
Or both. Yeah.
Or both. Well, always, usually both.
Yeah.
So that's important because when people come to us and they say, well, which one's the right path or the wrong path? There's no right or wrong. They're both, they're just simply different. Production building is more popular, because there's simply more inventory, right? We have big builders that come and they buy big neighborhoods with lots, and the only way to get a lot and get a home in that neighborhood is you have to work with them and buy one of their homes. And so that's the first reason. The second reason is it does require less cash down. Usually that earnest money plus construction deposit is less than you getting, not always though, than when you go and get a new construction loan from a bank.
Yeah. And I won't name names, but there's a builder we're really familiar with. It's a production builder, so a big company that usually buys like Clay said, they'll go in and buy a whole bunch of land, develop it all, and pre-sell or sell in that community and go in and buy. inventory has been to the point where they're selling out these communities with 20, 30 or more lots, and that they'll have a waiting list and sell out in a matter of hours, 3 or 4 hours. They'll sell these communities out right now. And the nice thing about a production builder is that they have plans, and a lot of times they'll let you make the selection. Sometimes they won't. Some are more lenient than others. But the nice thing is the builder that I mentioned that we're really familiar with, they'll let you come in with a $500 earnest money that's refundable for about 4 to 7 days. Mm-hmm. Let you reserve a lot, and you go through the design process after that with them. And I think it's a construction deposit. Correct me if I'm wrong. Is it like $5,000?
Oh, it just depends on the builder. Usually builders have a base price, call it 5 or 10 grand, and then based on your upgrades, they'll usually do half of the upgrade amount or a portion of the upgrade amount to secure, especially if you're picking what you like, which are eggplant purple walls and hot pink, like
bring it on,
tile and all of that. They're going to want a lot of deposit, because if you back out, they've got to resell that ugly house.
Yeah, and that's exactly what they're trying to do, is get as much down as they can. But the nice thing with that is with a production builder, generally you're somewhere between 5 and 15% down by the time you're done with the whole process. And that's what, if you're working with the builder, and you can ask them right away, do we get to make the selections? How many options do we get to choose? And those are important questions for 2 reasons. One, because if they have selections, there's usually a nice markup on those options when you go to make those selections. And then number 2, my mind just went blank. Number 2 is for options and
saying why choose a production builder?
Yeah, well, you get to choose the upgrade, so you get some leniency there, and you get to make the selections. But then also you need to watch out for the cost of those selections. I totally just drew a blank. I don't know what I'm. It's okay. But what Clay mentioned was that with the options that you get to choose, they're going to want so much money down for those options. So if a door costs you $900, one of the builders that we're really familiar with that I'm mentioning without naming is that they're 20% down of whatever your upgrades are. So if you spend $20,000 or $100,000 in upgrades, you're going to pay $20,000 in addition to your construction deposit and your earnest money deposit.
And that is a good segue into the custom home route. So if you decide, hey, I don't want to have to pick my house plan off of a menu, and I don't want to have to pick my selections off of a menu, I want to be fully custom, and you decide, hey, I want to go that route. And that's usually the reason why people lean toward custom, is because they want the flexibility to greatly deviate from floor plans and upgrades.
I think I'm getting distracted because we're wearing the same color shirt, and it drives me nuts.
Those of you who are watching this instead of just listening to it, we look good today. We are wearing the same shirt. That was unplanned. But we do look like a couple of guys from the Geek Squad, don't we?
We do, yeah. Sometimes we manage to dress the same. It's wonderful.
Yeah, it looks good.
Yeah.
Anyway, after that bunny trail, custom building. So you have plans drawn on a napkin, say, or you've got some really radical ideas like I'm obsessed with on some sustainability things like geothermal and the Tesla solar glass roof and all these fun things that we're going to bring up in an upcoming podcast. And you decide, you know what, the production builders just can't accommodate that. You cannot get the Tesla solar roof from a production builder, at least not currently right now at the recording of this podcast, and I doubt we'll have it for years. You got to go a custom route. So you decide to go that route. The biggest difference, of course, is that financing that we talked about. So you get a new construction loan, and oftentimes that new construction loan will require more down payment. It can be as much as 20%. Sometimes it's less, sometimes it's more, depending on which bank you go with. But usually that equates, and I'm talking 20% of not just the lot, but the lot plus the build. Yeah. And that can definitely be far more than these deposits that we're talking about with production builders. So that's kind of the biggest difference. However, if you've got that kind of money and that's the experience you want, then you get to jump into the custom building process. That process is, first you get approved for the loan, and then you either A, find a lot first, or B, find your builder first. And there's not a right or wrong answer, but you have to A plus B, lot plus builder equals overall build job. And usually people are pursuing both at the same time. They're aggressively out looking for what we call scatter lots. These are lots that are for sale that are not tied to a builder, so you can bring your own builder. And then while they're looking for a scatter lot that fits their needs, they're also interviewing builders to decide, hey, who do I like? Things that you ask a custom builder when you're interviewing them are things like, what kind of contract do you use? Are you a percentage of the overall house for your fee, or are you a flat fee? And then, of course, there is just a lot in personality and build styles that
Talk
you can
about that
ask.
for a second. So you have a cost plus fee with a builder, or you have a fixed cost fee. What are generally the pros and cons to that and the differences?
I mean, the biggest difference is one's a percentage of the overall bid. So if you bid out your house and it costs, say, $500,000 to bid, you'll pay a fee on that. So if you're or I shouldn't call them upgrades at that point, but if you decide to get a little spendier as you start the process, the builder's going to make a little bit more money. A flat fee is just that. It's a flat fee. So once you negotiate that flat fee, and it will still be based on your initial bid, if things change after that, the builder's fee doesn't go up or down, and that can have pros and cons with it.
So we had a mutual friend recently that has a cost plus build going on. They got a cabinet bid 6 months ago probably, and with a cost plus, here's one of the cons with a cost plus bid is that if you want the same cabinet 6 months later that were bid earlier, but you go to order them 6 months later because they hadn't been ordered yet, and the cost jumps, you've got to come up with a cash out of pocket for that difference. And right now, excuse me, one of the biggest concerns I think that is happening with new construction is the cost of everything increasing. I think we talked about that in our first episode. But with lumber and everything that's up and down and changing, excuse me, you want to be ready, I guess. If you're going to make those types of changes with a cost plus builder, you want to make sure that you have some cash set aside for cabinets if they come in $70,000 higher or $50,000 higher. And the one nice thing with a cost plus is it's usually really transparent, and you can see the costs for what they are, and as you make changes, you just get the direct bid from the builder and know that there's going to be a 10% markup there for whatever that item is. Fixed cost doesn't change, so the builder might put some extra padding in there in case pricing like that does change. And then if you change the product altogether, you went in with one cabinet bid, and then you change your mind and wanted a totally different one, then they would just update the bid to match your new selection, and that's always agreed upon, at least with a good builder and good agents. That's all understood up front.
Yeah, that's a good description.
Everybody through. So.
Yeah.
Cool.
So on that, I guess to finish this narrative that we're describing.
One more thought. I'll just throw this in there too. So when you're getting a construction loan, they'll do it a couple of different ways. You can come in with a cash ready, you're 20% down, and pay cash for the 20% down. Some people have it ready. Some people pull a HELOC. And when you fund that, when that construction loan funds, the first draw is what we call it. The builder, you will get the first draw to purchase the lot, get permit, and do the dig. And let's say that entire cost is $300,000. Well, each time the builder does a draw, every couple of weeks or so, that balance will grow and grow. And so each month that balance is going to get bigger and bigger, and you're going to have interest payments on the construction loan throughout the construction process. So usually when we talk to people that are looking to build custom with one of our builders, we just say, hey, be ready for one of our topics that we walk through with financing is if the builder isn't carrying the loan and they are, be ready for your 20% down, plus you're going to need to make interest payments on that construction loan throughout the process, and those will slowly increase as we get closer to finishing the home. And then the final loan, the long-term loan, is brought in and a refinance is done usually, and that's all taken out and just put into your main loan, and those interest payments obviously go away.
Pays off the new construction loan, and then you have your permanent loan.
And then some people have multiple homes that they have a bunch of equity in, and they'll use those the construction
use those as
lender.
down payment. And that's what I was going to mention too, is a lot of people do come to us and they've already bought the lot. So they've already found the lot before they found us or our builder.
Yeah.
And so they use the lot, especially if it's owned outright or paid with cash, they use that as their down payment, as their collateral for the new construction loan.
Yeah. And if you just want to get a lot loan, some people come in and pay cash for their lot. If you just want to get a lot loan, a couple of the preferred lenders that we work with that just do lots, A lot of credit unions will do them. You'll find that just your standard lender a lot of times won't do just a lot loan. But if you do that, you're going to be, just for a lot loan, you're probably going to be somewhere between 20 to 35%
Usually
down.
35% down for at least here on the Wasatch Front. That seems to be the trend.
Yeah.
So it's a lot more to get just the lot. They consider buying dirt more risky than buying a structure.
Right. And they make money on the long-term financing or their construction loan and that. So a lot of lenders, if they do the lot loan, they want to know there's a deadline of, 2 to 3 years out that you need to at least start building.
Yeah.
There's a lot, I don't know, unless I'm just thinking of our lot lender in Lehigh. But there's different, different credit unions will have different options, and things seem to be changing all the time with different lenders. So it's worth making a few phone calls and checking to see if you can get away with 10% down, or if you can get a fixed rate out of the gates. We're hearing things like that right now. So
can I just take a step back before
Please
you put
do.
us all to sleep?
Yeah.
The reason this matters, and if you get no other message than this, it's that financing is changing all the time.
Yeah.
Like especially for new construction and land and these new construction loans, they change a lot. Like the terms change. Like literally every month we learn something new. We find out people can lock their rate, in longer time periods on it. So it changes a lot. So if you learn nothing else from this conversation,
do your homework.
Well, and connect
Hire
with people that know what they're doing.
Don't be boring on a podcast.
All of the above.
Yeah.
But listen, there's no right or wrong way, again, on production or custom building. Custom can get very expensive, truthfully. Some of the pitfalls that people ask me a lot, you do have to be much, much more involved when you have the new construction loan in your name. You're managing some draws sometimes. It's just a lot more involved of a process. But that can also be the pro. People like to have more say in their home and have that more involvement. But it can be tedious and it can be tiresome. And sometimes the normal home buyer, especially if you've got two working adults in the home and kids everywhere and everything, that can be just not a great scenario. And we've seen that numerous times. And sometimes the production route can be better because of that. But at the same time, you don't see too many amazing homes that come out of the production lines. Usually they're customized.
Yep.
Okay, what are we missing?
Sometimes with the construction loans, you have to put additional money with the construction lender, right? Into an account.
Yeah.
Lending.
I was going to say, if you want to dive even just deeper, and I won't go super deep into this, but the answer is yes. We have multiple construction loans that say, hey, not only do you need your 20% down payment, but we want your interest, the interest that you would pay on that construction loan. We actually want that prepaid in a checking account at our bank that's frozen. That is very common.
So do they pull the draws from there?
No, that's what's frustrating is, you can see some of us have personal experience with that. They won't take the dang interest payments out of the interest reserve. Doesn't make sense. But I think here's why in this particular case study, AKA me, and that is the
you're too high risk.
No, it's the commodities are. You guys will hear like the lumber made headlines like every week in 2020.
Yeah.
Right. We all know what happened there, and that's what happened to me. Is they said, you know what, we want to have a lumber. A specific contingency just for the lumber. And oh, by the way, we want that cash in an account. And then finally, last minute, they said, well, we'll agree to have that be a hybrid of your interest reserve account and your lumber contingency.
Oh, they did do that.
Yeah. And so, but that's why I can't pay my interest out of it. It's because in their mind, it kind of has two labels. But that's an interesting concept. And that is when they saw that happening, and we might see that 2021 with concrete, where you might have a bank that says, hey, we're going to give you this great loan, but we want you to put additional cash, your down payment, into a checking account frozen for just additional contingency in case concrete goes crazy or lumber goes crazy. That is completely happening right now. And you should be aware of it. So overall, get ready to tie up some cash. It is a process to do the custom route. In fact, I wouldn't be surprised if you'll see more mainstream now. Some production builders and builders that we work with are adding on their lines, even though they're getting the construction loan, not the consumer. They have a clause in their contract that's called the commodities contract that says if something that we bid out, like lumber and concrete, changes more than 10% from the time that we contract to the time that we're paying for it, if it changes more than 10%, we have the right to renegotiate the price at which you are paying for the house.
I have one. That's great.
Great for builders.
Yeah.
A little bit spooky for buyers, but
yeah.
I think I think that is a win-win. And not that I'm on the only the builder side of this conversation. I think people need to understand that there are a few commodities like lumber and concrete that they can't control. So if you contract on something months before the builder has to pay for it and it goes up, I mean, a builder could really find themselves insolvent, at least on that build job, if prices completely wipe out their profit, especially when you think of a lot of builders' profit, they're lucky to be at 10% profit. So if lumber and concrete, for example, both went up 10%, next thing you know, they're just not making very much money on a job and could even find themselves, especially if it's a huge project, not making any money. Yeah. So they got to protect themselves.
It's different nowadays than the old days of 30-40% for a builder, but homes are also bigger and
homes are appreciating like crazy, so I don't feel too bad for builders, but because they're increasing prices, but there are some swings that can get them in a pinch.
I have one last question before we end this episode.
Yes.
Have you ever seen a builder guarantee a settlement or finish deadline?
Oh, good question. Once.
Really?
Once. This is so the number one thing, like, if builders, plug your ears. Anytime somebody asks us or asks the builder, hey, when's our completion deadline? If they give a deadline, the minute the builder walks out of the room, we look at them and say, add 2 months to that, if not more. Yeah. But you always add time to it, right? There's just so many unexpected delays. One time in my 15-year career have I had a builder guarantee a closing. And the way that he wrote it in the contract was, if I don't have the substantial completion by this deadline, I will pay $6,000 more toward all your closing costs. Well, guess who didn't have that home done by that deadline? Surprise. And guess who got $6,000? My clients. It was one of those things. I threw that out there because he kept throwing out this date. Oh, I guarantee I'll have it done. So, guarantee? Well, let's put money on that date. And he agreed to it. And I thought, that's sweet. And sure enough, he did not hit that deadline. I thought, why would you do that to yourself, builder? Like, well, we caught him, So yeah, builders usually never, ever, ever give a deadline. And it's not because builders are bad by any means. It's because they're so much out of their control. I mean, you want to talk about like the perfect example, it's called COVID-19. We have appliances that were ordered 6 months ago that are still sitting on ships coming from China right now. And you can't close on a house without a stove. That's one of the occupancy requirements by cities and by lenders. And so talk to us about stoves. We've been shuffling stoves from house to house just to get occupancy. Yeah. But these are real things. So new construction is fun. If you are thinking about it, come talk to us. Like it really is exciting. If you're just burned out from chasing existing homes and getting beat out in multiple offers, consider new construction. It's still pretty aggressive as well, and especially on some of the lower price things, it's still somewhat of a bloodbath, but not as much. Yeah. So it's worth pursuing for sure.
Land prices keep kind of increasing, but it's one of the challenges.
Well, but the nice thing about that is you lock in at today's price usually, and then just in the time period it takes to build the home, usually you're at that point. You might feel like you're paying a premium price today, but in 6-7 months from now, when you're actually closing on your home, you're like getting the deal. Yeah. At least that's how it's been the last 2 years. It has absolutely been. You feel like you're overpaying at contract, but then by the time you're moving in, you're the best deal in the neighborhood. Yeah. And that's a good feeling to have when you have some instant equity. And that's what we're all about, building wealth through real estate. Look at that. We buttoned up the whole episode.
I love it.
Thank you, guys. We're going to have a lot more topics diving deeper into new construction, especially into product type and design and some of the more interesting topics. I know finance can be a little bit of a snoozer, but that is step one on really any real estate purchase. Okay, thanks, guys. See you next time.
Have a great day.
You've been listening to the Red Sign Podcast, a deep dive into legacy wealth building through real estate. See you next time.